Thanks for joining us for today's episode. This is going to be a fun one. We got our friend Ben Sebly, partner over at BCB Group in London, joining us today, and we decided to do kind of like a year-end review, a roundup of sorts. I'm joined by my co-host Ryan Gorman, but Ben, thanks for taking time out of your schedule to join us, man. Always fun to have you on.
Hey, thanks for having me back. I can't believe you made that decision.
Yeah, come on. It was an easy one, and you guys are in lockdown in London, so I had to give you something to do today. It's this morning we all woke up, and this will be a timely episode because this episode's going out today, but we all woke up this morning to a really, probably the most fantastic early Christmas present we could get, which was Bitcoin hitting, I mean, when I just last looked, it hit 23.5 on the early morning hours, but when I just last looked, it was 23.6 and change. I mean, this thing is going incredible. I will say we did an episode, a market analysis episode the other day. I think Monty, who we had on there, an analyst, was like, it's going back 21. We're all wrong. We got egg on our face. We were talking earlier, Ben, you said, I think we're seeing 30. Is that realistic to you? And do you say we hit 30 before the new year?
I mean, I dread giving predictions because they're always wrong, aren't they? But what I will try and claim is at 18, when we hit 18, we had kind of Reuters and a few people ask us for comments. And I remember just fairly confidently saying, okay, we can do 30 before year end. And then up until like a few days ago, I was panicking, thinking, I got it wrong. They'll be able to trace me back. But now we're seeing that run. And I think, with a lot of the news in the background, and especially without the crazy retail inflows, we might have a chance. But I think we're sort of kind of going into overbought now. I think we need to maybe consolidate a little bit before we kind of grind higher. We'll see. I mean, it's anyone's guess. The main thing is that we've broken that psychological 20, and we're in a better place than when we started the year, which was what, 7?
Yeah. Mm-hmm. Yeah, everybody, my overused saying, everybody always wants Bitcoin at 8,000, or doesn't want anything to do with Bitcoin at 8,000, but everybody wants to buy it at, now 23,000. So I wish I bought more in the beginning of the year.
Yeah, by the way, so obviously it hit 20. And a bunch of my mates in banking just suddenly all text me at once independently saying, right, okay, can we buy some through you? We want to buy some. So they're all like piling in at 20 and they're patting themselves on the back now, which, fair play to them.
It's funny you mentioned that, right? Because Guggenheim jumped in, they disclosed at 10K, right? And with them piling in, then that Ruffer's $1 billion allocation to Bitcoin being made public yesterday, and then you have MassMutual and you have MicroStrategy buying even more Bitcoin. I mean, do you really think we'll go below 20K, or will those guys that jumped in at 20K like kind of just have like a floor where they won't necessarily see loss?
It's funny, isn't it? Because we've seen consistently those in the market all year, really positive sort of new entrants in terms of from the institutional side. And that's been steady. And obviously we come back to the 20K mark, and now it's starting to get slightly more into the non-crypto sphere, but it's still not properly there. I think we have got good support here. I mean, certainly for what we've seen on our sort of liquidity desk, it has been new instos coming in to buy in size. We haven't seen the silly retail buying, apart from my friends just now, and it's definitely feeling like it's got legs, but strong legs this time. And all the news backs it up. And we're in a different place now. Obviously, we've got regulation, we've got certainly clarity there, we've got some infrastructure to make this kind of okay. I think it's more just the sort of economic backdrop with all the stuff happening your side of the pond, Alex, that might kind of like ruin the day here. But I don't know, what do you guys think? Because that's an interesting one, isn't it?
Well, first of all, I mean, today we saw the S&P 500 and NASDAQ hit intraday highs, which was phenomenal. I always like it when everything is just high at once, right? You know, it's always a euphoric feeling until it's not. You know, I think there are a lot of factors on this side. Mainly, it's geopolitical, right? I mean, that's the biggest factor on top of COVID. But you know, they always say Republicans usher in exuberance into the economy. We have an incoming Democratic president in just over a month. I actually think of what's happened the last 4 years, and this is as much as I'm going to say on politics, that the economy is going to do really, really well because there is a change happening in the White House. But we'll see. You know, you guys aren't short of your own scandals. You got this Brexit crap that's, you know, I don't even. Yeah. You guys are fighting your own stuff over there.
Yeah, I mean, it's actually, you know, we joke about it, but a lot of UK companies are coming up with Brexit plan last minute, and there's still no clarity into the year. That's coincided this side of the pond with the FCA sort of registration process for crypto companies, and they've been overwhelmed. So, yeah, that's sort of a bit of a headwind, and it doesn't particularly help that Mr. Biden's not a massive fan of Brexit either. So I think we're going to get to the back of the queue when it comes to him coming to the White House.
Yeah, you know, a lot of stuff, you know, like we said at the beginning, a lot of stuff has happened. And, you know, what do you feel that institutions, you know, what institutions have come in, whether it's the Tudors, the Guggenheims, Mass Mutuals of the world, do you think this has helped accelerate the crypto price, the Bitcoin price action?
Yeah, definitely. Sorry to cut you off. It's, you know what, that digital gold narrative we started seeing really kind of get mainstream sort of interest in summer. Really started kind of bleeding into the fund market. We saw some of the funds start coming in, but gently. Now, sort of late summer, in the last couple of months, we've seen, certainly on our side, what amounts to sort of panic onboarding ahead of all this price action. That was a really interesting thing. People wanted to get on board. They wanted sort of banking that was crypto friendly. They wanted to set the infrastructure there so they could get in. And it seems like, from what we can see, they've been thinking about it. And I don't know what the catalyst was. I think it was just a bit of herd mentality amongst sort of the buy side. But now they're kind of moving in as one. And some of that's trickling through to the headlines, but not huge amounts. So that's why I do think that there might be legs. Again, I'd be really interested to hear if you've sort of heard the same thing in your circles, because that's what it sounds like over here.
Yeah, definitely. I'm hearing that. First, you have like Guggenheim saying that Bitcoin's fair valuation, what it was Guggenheim, right, that said 400,000. And you have JP Morgan saying it should 10x just on retail adoption by millennials alone. Yeah. And to your point, that retail FOMO trade hasn't really even kicked in yet. And 20% of PayPal users already own Bitcoin, according to a recent survey by Mizuho Bank. So I think, you know, we still have so much room to grow in this rally if we're waiting for that retail money. And if this many institutions are talking about it, like think about like cockroaches. If you see one, you know you have many. For every one institution, they're not cockroaches themselves, but for every one institution talking about, there's probably 5, 6, 7, 8 other ones that are allocating to it quietly and not saying anything because they'd rather just reap the benefits of it than be public about it because they're media averse anyway. These types of firms don't generally like speaking to the media unless they have to. So this isn't really, the institutional money is here. It's finally coming. I mean, it's not here in the amount that it's going to be in, but it's finally coming, and we're starting that. To your point, the price action is a result of that adoption.
Yeah, exactly.
And to your point, Ben, you know, there hasn't been the crazy retail inflow yet, but retail FOMO can't stay out of the market for long. And when that comes in, do you expect a movement upwards, or do you expect smart money to take some profits off the table?
I think smart money will I think you're right. I think they'll take profits. I'm quite thankful, actually, that there's been an absence of new retail. I would say, from what I've heard anecdotally, the old retail that was in, they might still say have a Bquant account. and got burnt maybe the first time just with the price action. They're sort of looking back at it. And I think maybe some of them are kind of coming in again, especially some of the more educated ones when it comes to crypto. In terms of sort of incremental new retail panic buying, like we saw in that first bubble, I don't think we're there yet. I really hope we avoid it. I think we're not there yet because it's not massively spilt over to sort of mainstream media, rightly or wrongly. But I guess it will come, and I guess at that point it will be pretty useful for sort of the instos to take some profits, pull it back, dampen some of the fire, so we don't just get that crazy sort of overbought nonsense that really ruined it the first time.
I also think it's really, I think it's been really prudent that we have people like Guggenheim or other corporates or institutionals coming out and doing these price predictions, 300, 400,000. I mean, we all think they're foolish until they aren't, but it's better that they're coming out and doing that than back in 2017 with the John McAfee's, Bitcoin to $1 million and everybody else. It seems a little more rational now when we hear, right?
Yeah, exactly. I mean, I think the John McAfee's and stuff are, finger in the air. But it's nice when people actually can show they're working, like an old school maths exam paper. If they go kind of, if it replaces gold, it should be between 500,000 and $1 million. That makes sense. And obviously, the market's going to change. Obviously, the use case is going to change. But it really does feel like the digital gold or the alternative to gold mainstream sort of narrative is taking hold. It makes a lot of sense and people are going for it. I wonder, when will it be, say, Ethereum's turn? I know it's slightly longer play. Don't know what you guys think. That is really interesting. It hasn't caught up yet.
It's funny you mentioned that. Didn't CME Group announce yesterday or the day before that they're going to start offering futures on ETH? So I think that right there is going to be a huge catalyst. It took Bitcoin futures a little while to catch on, but once they did, you see what the adoption curve by institutions has been over the past few months. A lot of people, including our friend Rob over at Digital Asset News, they think that ETH is going to 4x Bitcoin's performance. And, due to DeFi being linked to it. And I know Rob isn't Guggenheim, but he's a reasonably well-informed investor. And, there's a lot of logic behind that. All the projects that are on ETH using it for their DeFi protocols, it makes sense. There's more utility, right? So seeing ETH outperform Bitcoin in the long term it feels to me like a no-brainer. Not investment advice, anyone, but it feels like a no-brainer.
I'm all in ETH now because Ryan said it. I think Ryan's correct. Now, do we categorize ETH as the silver? I don't know. Are we going to start playing that game?
The platinum to Bitcoin's digital gold, perhaps.
And the XRP becomes copper. I mean, are we just going to equate them to commodities now? I don't know.
It's crazy. I've heard palladium for ETH as well. People are picking precious metals. I don't know. It's interesting. It's a slower play, and I think the whole DeFi thing around ETH. I mean, that's been one of the key themes of this year, hasn't it? And no one could have predicted that. That's why I love this industry, because last year we wouldn't have known that. A bit like we wouldn't have known coronavirus hitting. We wouldn't have known that. Which always makes me think, each year in this industry, something new really happens that takes hold that we can't predict. And I think ETH is well placed, like it's shown with DeFi, to be that sort of bedrock. And, it's got the adoption. It's going to be so hard to be displaced by, other really good protocols. It's just a bit of a slower burn, isn't it? Which obviously isn't what people want when they're punting.
I think you're right, but I think what ETH is doing that's important for the market is it's lifting that tide evenly, right? So I think ETH is bringing support, to Ryan's point, like with the DeFi market and stuff like that. So when you're looking at a coin market cap or any other multi-asset chart, you're seeing everything be lifted, right? So ETH may be a slower burn, but I think it's helping. It's that non-direct exposure into those exotics that fall below it.
Yeah, I think that's a really good point. And it's, it's flexible enough to be whatever with the future. There's going to be the upgrade to the protocol. And really, that's going to be interesting to see how that pans out with the market at the time and what it makes of it. Feels like Bitcoin has sort of found its place first. ETH's still waiting to find its place. I don't know what you think about the value of anything else. I mean, apart from say stables, are there any coins that you guys see a lot of value in?
I mean, what do you think of Litecoin going above 100?
Oh gosh, no.
So bizarre. It doesn't make sense. There's
Does that
nothing
thing still
there.
exist?
There's nothing
Like
there.
Dash, isn't it? No
That
idea.
is the most, to me, I'm going to give my personal view and get bashed up for it, but that is, to me, out of if I had to go with the top 10, top 20 coins, Litecoin seems to me to be the most emptiest coin of all of them. I
It's a
mean,
zombie coin.
It's the empty suit of coins. I'm sure we're going to get sued now, but
why? Lee doesn't own any, and he created it. You know, he sold it all.
One thing I want to ask you, Ben, about ETH real quick before we move on. A lot of people, you know, especially in the retail side that I work with as well, talk about the lower psychological barrier to entry for ETH because it's a lower price for an individual coin. Is that something that you see as being an actual factor? Because people can own a whole ETH without having to basically pay for a cheap car.
That's a
right?
good point. I can afford like an Aave now. Right now, I can afford an Aave.
I get it. It's I don't know. I think ETH, you have to have some level of interest in the industry. So it's some, you know, you then have to be educated enough to understand what ETH is. And if you are, then you also understand owning one whole one doesn't make any difference, you know, unless you owned, what was it, like 28 of them that you needed for the proof of stake. We haven't seen that theme on our trading desk, which sort of caters to the ultra networks. We haven't seen that. It's pretty much been focused in stables and Bitcoin. And if anything, we've seen just people, they've been waiting to sell the ETH. The only flow we've seen has been profit taking, and then we've had messages after just gone, I've been waiting 2 years for that.
Yeah, I can imagine. I mean, the volatility ETH, when you see it go over 600 and you're owning it, and you know your bag is somewhere in the threes, you're like, let me take it now because there's a great chance it's going to go back to the threes, and I'll be able to catch up on. You know, one of the things you just popped out was stablecoins. Stablecoins, this is, I mean, 2020 has been the year of stablecoins. We've seen, you know, massive AUM accumulation with stablecoins. They serve a really important purpose in the market, but can you go over, since you guys deal with them so prolifically, go over what stablecoins are actually, you know, where they are in the market today? What do they mean?
Yeah, sure. So just to give a bit of context to listeners that might not know sort of who we are, what we do. So BCB gives banking to crypto firms, and or any normal firms that want to deal in crypto for that matter. And actually a big part of those non-crypto firms that deal in crypto are money remittance companies. And really, you know, stablecoins were the first real use case for crypto that we saw, with people really using it to improve sort of their business, efficiency, and sort of costs and prices. So stables, we don't think there's any kind of surprise here that they've grown so well. Obviously, we've got the kind of crypto-facing stablecoin uses, but then we've got the money remittance and the other uses, and the fact that you can kind of take billions of dollars in your pocket across a border and not have to go near a bank. And yeah, seeing the real use cases has really put it in perspective. And we really can't wait till the time we can build into our payments console the option of going, do you want to pay with GBP normally, take 2 days, cost £2, or do you want to send it for free in 10 seconds with GBP stable or whatever? And we're getting close to that. We are getting really, really close to that. There's been a couple of projects that are trying that. But it's all about the on-off ramps, and we're sort of waiting for them to catch up. But yeah, no, I mean, they really, really interest us. USDC is obviously great. I mean, that's gone up, what, multiple of 6 times this year. It's crazy. And really good product, one-to-one backed, regulated. And we've seen sort of the central banks come out, you know, in fairly short order and say, we are interested in this stuff. You know, this year we've had China, the UK even. And I think it's now at the point, it's now hit that critical mass where, you know, real people have gone, oh, God, we can't stop looking at it. And I'll never forget, if I may, just one last thing. One guy from the Bank of England told me, he goes, look, we get it. it's great. This was a couple of years ago. It's really good, but it trades about as much as the stock on the FTSE. And he was talking about crypto market in general. So he said it wouldn't be worth them looking at it until it hit that critical mass. And I think we're there now, which is really, really interesting.
I think you're right. And I also think it's great that you mentioned remittances, because the next asset I wanted to ask you about is XRP. You know, because I mean, everyone talks about its potential in the remittance space, and leading up to the airdrop, which should add quite a bit of utility and value to the XRP ecosystem if Player pulls off what it's trying to pull off. The price pumped, and then it immediately tanked right after the snapshot. It's up to 60. It was up at 65 cents as of about half an hour ago per Ripple. Now it's down to 63 cents. That's a 24% gain in 24 hours. Do you think that's because people are actually behind the value proposition Ripple provides, or is this just a case of rising tide lifting all ships?
Yeah, it's a really good question, isn't it? Because I'll be the first to admit, I don't know much about Ripple. I thought it was mainly focused on sort of big projects, closed network, big projects. That was my understanding of it. In terms of kind of what we actively see, we don't see that many of our traders, regular traders or remittance companies use Ripple. They tend to use what's out there and what's easy to exchange. So I've been told anecdotally, if you go to Hong Kong to a normal trading desk, an FX bureau, they'll have all the fiat currencies and USDT will be there as well, which, you know, means that you can use it. If there's no XRP there, then you're obviously less likely to use that. So I don't know. I think stables are more relevant for remittances because they're stable. And clearly, like you said, with XRP being able to kind of have that volatility of a highly volatile currency, you're then running a price risk when you have to convert it back to fiat. That's clearly something that I don't think you can even hedge that. I don't think there's a derivatives market for XRP. So I'm not too sure. So I'm no expert. We just don't see any use of it kind of through our platform.
It's funny how stable coins, you know, from my perspective, dealing with the global crypto fund industry, has taken a regional click. So I find that people in Europe like USDT, people in the US like GUSD and PAX, and people in Asia primarily BUSD. You know, it's a very cliquey club on who likes what tether or who likes what stable coin.
Yeah, we definitely see most demand in USDC actually. So we see the remittance companies using Tether, but USDC is more for the really serious players, big institutions that actually want to do something meaningful and useful, and use it properly. So USDC is the one we actually see probably the most, well, definitely the most long-term value in. And Tether seems to be the one that has done the best, but it's been around the longest, but no one's sort of taking seriously, but it won't go away. So it is what I don't know what you think about it. Like, do your people you know actually ever use sort of stables to do anything?
Yeah, I mean, we do a lot of let's call loan arbitrage in stables, and you know there is a lot of USDT being floated around. The problem with USDT is though that everybody has to take an extra step to hedge their exposure on it, right? Everybody's always scared of USDT exposure. So to your point, it's only been in, let's say, the last year that people are coming in with, you know, the other stable coins, the ones that they feel have longer term value propositions to them and stuff. I think Tether they accumulated so much, they became so big, so large, and to your point, they're just the oldest, right? So it's going to have its natural fit, its natural audience, no matter what.
Yeah, exactly. I mean, they're the incumbent to be. And having said that, I think on last check, USDC was up at 3 billion, and you know, in summer they were only a few hundred million. So, I mean, if you extrapolate that, I think there'll be the sort of the death cross maybe next year.
So it's funny that the stable coins, not funny, I guess, it's just strange. The stable coins that are prevalent are those that are pegged to the US dollar. And everyone's talking about how crypto is going to supplant the US dollar, how Bitcoin is going to supplant the US dollar as the global reserve currency. Not everybody, but a lot of people. If you have all the prevalent stable coins pegged to the US dollar and they're not necessarily derivative of it, but they're based on its value, doesn't that just reinforce the US dollar's position as the global reserve currency more than Bitcoin's even?
Yeah, it does. I mean, I think it's no surprise as well that also when you look at kind of the banking market for crypto, the trailblazers were the US. You know, Silvergate Signature, they're proper banks. They bank crypto people. You come to Europe and it's a mess. It's, you know, sleepy private banks, e-money institutions having a go, and us, and then sort of kind of Asia, you've got some banks, but it's quite hard to get relationships with. So there's that, and that's why I think we've seen sort of this flight to dollar. It's easy to do crypto stuff in dollars, but definitely this year, a big thing that's worth mentioning has been a mass migration, especially from west to east. So a lot of the big US houses are opening the sort of the European offices, and there is a lot more interest in European crypto markets. Now, the problem with European stables, for the most part, especially with Euro and CHF, is the negative rate. And you know, when you're sitting on, you know, hundreds of millions, billions of negative rate currency, you've got that hedge, which you've got to manage, which means it being one-to-one backed isn't easy. People are looking at it and it's coming, but it's a slightly tougher problem to solve. But I think my prediction for 2021 is that we see a big entrant into sort of the European stablecoin market, whether it's Euro or GBP first, I don't know.
I found it interesting that you mentioned how the U.S. banking sector, I guess the Silvergates of the world and their competitors, they're at the forefront of crypto innovation and being banks for crypto. And everyone here is so concerned about potential regulation coming down that's going to stifle innovation and keep projects from, you know, flourishing and developing here. So it's odd, that juxtaposition, that we're the ones that everyone outside the U.S. is seeing as being the innovators, and we're terrified that everywhere else is innovating and our regulators don't get it. I mean, is that a product of us just not being as self-aware or aware of what's going on outside the U.S., or is it simply a product of they were just the first movers ultimately in a space when it wasn't really highly regulated yet?
Yeah, it's a tough one, but I think it's more the latter. I think they were just the first movers. And look, the US sort of market, at least you guys have regulation and it's fairly clear. It can be a bit tricky. Come to Europe, especially with Brexit, Europe is sort of made up of all these different states. The EU sort of kind of legislation on it is confusing at best, and people follow trends. So at the minute, people are all trying to register in, say, Estonia. It's quick. You can get a license, get regulated. And yeah, it's just been painful, and it stifles growth in actually quite a small industry that's really struggled, you know, with its infrastructure. So we've had the headwinds of regulation. We've had the headwinds of the crypto winter and sort of public perception. Luckily, we've had VC money pour in sort of late 2019, certainly this year. We're now starting to see the fruits of that, but we're now having to go back to the stage of sort of going back to the regulators and say, hey, we're a real industry now. We do things properly. Please take us seriously and enable us to actually do stuff and make your life easier and better and make you money. And that's where we're at now. And there's some really, really good products that you can make way more money on in crypto, you know, fairly low risk than you can in traditional. But that hasn't sort of got into the public sphere yet. But we're trying to push that. And we've got sort of a new yield-based product that we're coming out that we're sort of just testing now that really is that nice fusion. And we think we've already got a lot of non-crypto demand for it, which is interesting.
Well, you know, speaking of regulation, the UK came down with a pretty blanket, you know, regulatory law recently, and it was basically like, if you're in the UK and you deal in crypto, that's it. I mean, I mean, it was kind of scary when I saw it, right? It must have made a lot of people in the UK scene start running and being like, "What? Can you explain that? Like what that actually means and what's going on with the UK?" Because it felt like a big hammer coming down.
It wasn't meant to be, but it ended up being so. And the reason so was because so the FCA, the UK regulator, they wanted kind of UK crypto companies that, especially, I believe, custodied crypto assets in part, to register, and there would be a formal list, and you go through a process, and you applied for the registration, and it wasn't a simple process. Most normal companies had to get, you know, legal advice to do this. We were one of the first to go through the registration process, and what we found from sort of kind of back channeling and hearing around the market is that the FCA expected X amount of crypto companies to apply. I think they expected, you know, it was something like 50, and something like 600 applied. So they were instantly overwhelmed, but they then put this kind of end of year dates and sort of milestones for applications to be submitted. And now what's happened is you've got the FCA is overwhelmed. They don't know which company is from Adam, so they don't know a Coinbase from, say, you know, a startup. And they're in a place now where they're sort of, I think, just offering an extension for people on a list. But it's shown really, even though the FCA do know about crypto, they're not geared up for it. And it's just another painful thing, because we're now having to turn some clients away that aren't registered, who are a startup, and they can't get registered because the FCA are flooded, basically.
Well, I mean, do you first of all, do you think the FCA was caught off guard? Like, hey, we didn't know we had 600 crypto companies in existence here.
Quite literally, very literally. They've got to the stage where, you know, they were meant to show a big list on their website. I think there's still 4 names on the website as of today, and there's like a list of about 200 that have been given the extension because they're trying to get their heads around it. That they have asked some fairly interesting questions, talking to the sort of MLROs at the different shops, and questions that really kind of show that they're not that comfortable with the industry and what people do. So look, I mean, it's a learning process for them. At least we're going through it now, get it out the way, and at least there is clarity, even though it might not be perfect and they might not be geared up for it. I mean, you know, they are civil servants at the end of the day. So it's like what's your driving thing that everyone always makes fun of in the States?
Nobody makes fun of our driving.
No,
unless you're from New Jersey. Jersey drivers. That's like the go-to bash. Like they just bash New Jersey drivers. En masse.
Yeah, aka Alex.
Listen, you guys build cars with a steering wheel on the side that's only good for 2 countries in the world. We digress. Now, you guys launched earlier in the year Blink, which you know, one of the weak links in infrastructure in crypto was banking, you know, and to a degree it is, but it's improving every day with, you know, by firms like yourselves and stuff like that. Now, Blink was Bitstamp, who I believe first on board. Can you give us any updates on Blink? And then also for the viewers who didn't watch the original episode, tell us what Blink's about and what problems it's solving.
Yeah, sure. So Blink was basically our response to something that had been established in the US. So I've mentioned before the big 2 banks in the US. Or have I just cut out mid-sentence?
Yeah,
Ryan and I looked at each other like we're trying to decide if it was us that froze or not.
You just thought I really didn't understand the question, just panicked, just froze, you know. I'll start again. Hopefully, that normally happens once a Zoom call. It's just we got it out of the way now. So basically, for those that don't know, we set this up in response to something that had already been set up in the US for a while. So I mentioned the 2 big banks, Silvergate, Signature. They had instant settlement networks that effectively meant their customers could send US dollars to each other instantly, real time, outside of banking hours. Obviously, crypto is 24/7, so people want to move money on exchanges between market makers 24/7. But they only do it for US dollar. Now, come over to Europe, there's nothing like that. So we wanted to set that up for all the currencies we offer banking, especially European currencies. And we did that. And the take-up's been phenomenal. It's especially a problem in Europe because, say, euros, they can only move between people during banking hours. So, you know, at night and on weekends, and when people are eating Christmas lunch, that doesn't happen. But you might want to trade on Christmas Day, but you can't move your money to your Beacon exchange to you know, get on there. So, we've seen phenomenal take-up. We had a big surge of people trying to onboard after it. A lot of people have taken a while to sort of connect APIs to us, and that process is still ongoing. We're helping those guys with it. But yeah, no, that's done really, really well. And that was one of the two things we wanted to solve in Europe. First being the instant settlement, and then the next one being the sort of the negative rate hedge. And so the yield sort of product is going to come out, and that's going to be our response to both problems we see sort of continental Europe offering.
Very cool. Ryan, anything else to wrap up this year-end episode with? I just want to say this year is like the awesomest year in crypto so far. Yeah. I mean, forget 2017. They only had December back then.
Yeah. 2 weeks in December as well.
Two weeks in December, and then for 2 years everybody hated the crypto market. What do you think is? How about this? What do you think is in store for next year? Give us like one or two big things that you feel are going to come our way next year.
And to add to that really quickly, what do you think the next DeFi will be? Like, where's the next explosive growth coming from? What sector of blockchain do you see that happening?
Ryan, if I knew that, I wouldn't be here. I'd be on an island in like the Bahamas on my $1 billion yacht. I don't know. No, but it's a really good question. Like next year, I think it will be a continuation of the theme. I think the infrastructure will improve. There'll be continued institutional sort of people coming through. I think stables will go through a fundamental change. I think there'll be more different currencies that are regulated and backed to come into the market. I think central banks will start doing more. But what's the next DeFi? And to answer your question, CeFi is actually really interesting. That seems, that's got people's attention. We can deal with that. Institutions in now, they're feeling brave. They don't want DeFi. They actually want CeFi for now. So I think DeFi next year will be DeFi, but it needs to evolve and people need to get confident with it, because it still feels very new and it feels like only the really cool kids are basically doing it and understand it. And I'm not including us in that, by the way. But I'd love to pin you both on what you guys think for next year as well, if I may.
I think regulatory clarity from the US, I think that's going to be huge, because once that happens, I mean, institutions have only kind of dipped their toes in the water here in terms of the world of institutional capital. Once there's regulatory clarity, I think that's when the floodgates open. The dam is just leaking right now, right? We can plug it with a piece of gum, like a cartoon. But I think once there's clarity, it bursts through, and then I think that Guggenheim prediction, I don't know if it comes true next year or the year after, but it feels like an inevitability.
But they said the end of the month.
Oh, they did? Because I'm still sticking to my 15.5 guns for the end of the year. But I think ultimately, I think that, JP Morgan saying it's going to 10x. Only 15% of Americans own crypto. I mean, where does the price go if it goes up to 30% of Americans or 40% of Americans? It can only go up, scarcity being a thing. So I don't know if we're still above 20 at the turn of the year, but that doesn't mean we'll be below it for very long. I think clarity will provide the impetus for the industry to stop being just a niche play, and it'll be much more mainstream, because then once there's clarity, more institutions, more retail spaces, there'll just be much more on-ramps. It can be in IRAs, it can be offered by the likes of a Schwab or UBS even to their clients on the retail side. And I just think that's ultimately what's going to happen in the next year.
I have 2 or 3 thoughts on next year of what's going to happen. I think one is we're going to see institutions go from buying crypto to trading crypto. And I think so all these cats who came in this year, the Guggenheims and everybody who said they're buying crypto, I think we see them open up trading desks for it, which from your point on the CeFi stance, makes companies like yours grow. That's where your rapid expansion will come from. I think big things for next year are DeFi products that normal people understand. I think that this year was again, to your point, Ben, the cool kids knew how to play with it, but us regular folks were like, what the hell is this sushi, and is that a mommy coin, and all that. I think it's settled out from a fad perspective. I think next year maybe we do see what like Stani over at Aave is trying to do, which is like DeFi mortgages or something like that. Maybe I fund my kids' college tuition with a DeFi college tuition plan. Who knows? But then I also, at the same time, I think, I don't know how this is going to turn out, but I think something might pop in the banking industry. You know, we have like Avante and Kraken, you know, becoming chartered banks over here in the US. I don't know where that goes exactly, but it sounds like something's going to go. Those are my thoughts for next year.
One more bold thought. There are a lot of players in the space from a custodial standpoint, cross-exchange risk monitoring standpoint now entering. I think there might be a Bitcoin ETF by the end of the year, next year, because you're satisfying everything that the regulators want satisfied. If you can prove trading volumes are legitimate, you can prove that markets aren't as manipulated as they were. Those are the two main concerns the regulators had. And if you can do that, and we're getting closer to that point, I mean, a Bitcoin ETF can't be too far away. And then watch what happens to the price then. That's just through the roof.
Yeah. Yeah. And I guess I'll add one more point. This is like a rabbit hole we're going down. You know, from a personal standpoint and dealing with the institutional clients and the hedge funds and stuff, I think hedging is a big thing for next year. I think this year, things like what BCB does as far as multi-FX hedging and stuff like that was big. I think you guys, that's a maturing area, and I think next year that's going to be a big driver in making a lot of Asian clients feel comfortable in coming in, and some of the more nascent European countries and stuff like that. So I think that'll be big as we kind of tighten up the infrastructure on the CFI institutional.
Yeah, I think that's fair. And now it's my turn. You did this with me last time. Okay, so I want to do this to you this time. Can we end on playing a game, possibly? And this is going to bite us, but at least we'll have a laugh if we'll see if we're right or wrong. So can we each make two predictions? So one prediction, just the BTC dollar price for the end of this year, but then the end of next year. Okay. I'll go first. I'm going to be so wrong here. I know I'm going to be so wrong. I jokingly said at 18 we'd get to 30. So I've got to stick with 30 this year. Next year, it's famous last words, isn't it? But I'm going to go with 150.
Ooh.
Wow.
Okay. All right.
That's really punchy, but who knows?
Bold. Well, I've been riding the 15.5 train all year. There's only a week left, 2 weeks left in the year. So I'm sticking to that for the end of the year. I am a stubborn man. But I think for the end of next year, 75.
Wow. If any of that comes true, I'm gonna stop sleeping in my car.
I'll get to leave my van down by the river.
I'm going to. I'm always a pessimist because I feel if I'm a pessimist, I will never be disappointed, and so I will stick with my thought process, which is a 30% correction before the new year. So I will take it down somewhere in the high teens.
15.5. 15.5 is a 30% correction.
I didn't want to copy you, okay? And then for next year, that's a hard call.
It's a long time as well. It's a long time.
A lot of stuff happens in crypto in a year. It's like a decade in the real world. I'll say 50,000. I'll again be the pessimist. I'm hoping for Ben's prediction because then I can buy a bicycle. But I will stick with 50,000.
I think that little exercise just shows what this industry is like, doesn't it? You know,
We have no clue. That's
yeah, whatever. We're all idiots. It's going to be wrong. It's going to be back down to 3,000. We'll all be out of jobs. That'll be it.
Real quickly before we go, I will say that like Ryan and I and a couple of other analysts, we do a weekly analysis show on the crypto markets, and I often say like maybe every third episode, just people, this isn't not just not financial advice. Just you shouldn't be listening to us at all.
He specifically says we're a bunch of idiots. Don't listen to anything we say.
I couldn't agree with that more. Definitely don't listen to me as well. Like, I have not traded crypto PA well at all. Do not do what I did. Yeah.
Ben, always a pleasure, my man. I can't wait for us to be drinking another pint in the pub soon. Hopefully the madness of 2020 and the coronavirus goes away soon.
Yes.
Mate, thanks so much for having me, guys. Appreciate it.
No worries, bud.